Hi everyone and welcome to today's morning report on Tuesday the 5th of July with me, Richard Perry, market analyst at Hantech Markets. We've got a slight safe haven shift going on in the markets again. You had sort of yesterday coming out, despite the fact that we had Independence Day in the States, you had a few signs out from the UK that all was not especially well. You had the construction PMI, which was very disappointing, shows really strong downside move on the construction expectations there in the UK, and also fears over Brexit. Obviously, S&P, for example, the rating agency. And also the IMF talking yesterday about the impact that Brexit would have on the UK economy, and also Nigel Farage quitting as UKIP party leader, sort of throwing even more political turmoil into the mix. So subsequently, we've seen cable strongly lower again today, as traders sort of take on more of a view in the wake of Independence Day in the States. So 130 ticks down on cable. We've just had out the services PMI actually for the UK, and it's actually not been too bad, considering 52.3, which is down from 52.7 expected there. But considering how significantly bad the construction PMI was yesterday, perhaps the services PMI is not too bad. Just marginal sort of fluctuation around on sterling in the wake of that data, but generally speaking, we've got safe haven trading sort of taking over today. We've seen the oil price, which is sharply down, sort of over 2.5% down on the day. Now that's sort of back below a pivot line, which it's actually around. I should change that. It's actually around 48 figure, that pivot line. So that sort of now possibly brings us back towards these key supports of 45.83 on WTI. But the main moves are being seen through the bond yields, really the Treasury yields, 2-year down again, 10-year sharply down again, ever falling away, those Treasury yields, aren't they? And that just reflects the safe haven status that we've got in the market. We've seen sort of consolidation, I think, in the dollar, although I think mainly that's because the euro sort of bounced back to flat today. I think ultimately this safe haven trading is still going on. You've got the yen, which is sharply stronger, again, big outperformer on dollar yen, which is I'll talk about that in my chart and appraisals, but certainly that is a key factor for the markets today. In terms of our data, we've had the services PMIs out now. Just looking at the factory orders for the States. It's expected to come in at minus 0.9%, and that would actually be, on a year-on-year basis, that would actually be just slightly higher than last month. Last month was 0.8. It's sort of on a year-on-year basis, it would actually improve to 0.6. So that's not too bad, but that's the expectation at 3 o'clock this afternoon. But certainly in front of that, we're going to still see these safe haven flows going on. Now, chart today is silver. And we've seen a huge run higher on silver in the last few days, as markets have continued to sort of play in and factor in the sort of not only the safe haven positioning, but also the fact that you're getting comments out from central banks that they're going to continue to sort of ease monetary policy, competitive devaluation. All these factors are sort of strong buying conditions for precious metals, and we've seen that in the last few days on silver. Perhaps a little bit ahead of itself. Got to 86 on the RSI. Now, that is an incredibly large level on the RSI. That's actually the largest since, well, actually above that 2012 level. So keep going back. You saw back to 2011 when you saw that incredible run higher in silver. So it obviously is stretched near term, but you'd still say that momentum is strong. But the signs are that it could be just coming under a bit of corrective pressure, just coming back into this. We've got obviously the peak at 21.10. You're already back sort of 5, 6, 7% below that currently where we're trading. So the hourly chart shows you already that just rolled over. You've completed a minor near-term top pattern below 1990, which was yesterday's low. and or yesterday's intraday low, and rolling over again today. The resistance coming in around that sort of that level 2007. So there is clearly a bit of a pivot forming around that $20 area for silver, and if it moves back below the early spike low of 1952, then it would continue this correction. Now, I suppose you could measure 1990, give it conservative basis 2075, so that's 85 cents worth taken. So you'd be looking at the 19-figure area, and that would certainly be again around about where that reaction low was on Friday. So 1898 was that reaction low. So it's certainly not within the realms of outside the realms of possibility of that happening. Momentum indicator certainly looking increasingly corrective. RSI back below 50 on the hourly. MACD lines falling away. Stochastics, if they go below 30, I think again that would be where we'd start turning negative again. So it is looking like it's a corrective move on silver now, near term. A series of lower highs in place on the hourly chart as well. So the corrective moves are racking up, and there's possibility of a retracement back towards 19-figure area, I think, on silver. But you've got resistance in place, as I said, around about that neckline of $20 area, 1990 up towards the reaction high of 2007 today. So I wish you good luck in your trading on silver today, and I will speak to you later. Thank you.